Today we will discuss about the financial intermediaries. Financial intermediary is an institution or a person that act as a link between two parties of financial transaction. That is, the financial intermediaries are an institutions or a person that act as a link between two parties of a financial transaction. That is, who act as a link between two financial transactions. Either he may be a person or an institution is termed as financial intermediary. These types of institutions or the person can be either a bank, a mutual fund, broker, etc. can be the financial intermediaries. And in these cases, one party is the lender, the other will be the borrower. That is, the person who connect these two groups are known as financial intermediaries. This can be either an institution or a person. A financial intermediary is an entity that facilitates a financial transaction between two parties. Such an intermediary or a middleman could be a firm or an institution. For example, banks, insurance companies, pension funds, investment funds, etc. What are the functions of these financial intermediaries? First one, convert saving into investment. That is, help the people or the institution to convert savings into the investment. Second one, intermediaries like commercial banks provide storage facilities for cash and other liquid assets like precious metals. That is, these banks helps for the storage of the cash and other liquid assets. Third one, giving short-term and long-term loans is a primary function of financial intermediaries. These intermediaries accept deposits from the entities with surplus cash and then loan them to the entities who are in need of the funds. They help in providing short-term and long-term loans. Then fourth one, to assist the clients to grow their money by investment. Intermediaries like mutual funds and investment bank use their experience to offer investment products to help their clients to maximize return and reduce the risk. That is, these institutions helps the investors to or the individuals to increase their money. That is, they give proper guidance for investment or utilizing our money for investment by maximizing return and minimizing risk. These are some of the important functions of financial intermediaries. They helps in converting saving to investment. They helps for the storage facilities of the cash and other liquid asset. Then they provide short-term and long-term loans, and finally they helps to increase our money. These are the important functions of financial intermediaries. Then what are the advantages of financial intermediaries? First one, they provide a convenient means to investors and borrowers who are not financial experts but required to partake in financial transactions. That is, they provide convenient means to investors and borrowers. They are who are not financial, those who do not have enough financial expertise. These financial intermediaries helps for the smooth financial transaction by their expertise. Second one, they do the work of analyzing and interpreting the risk and rewards for the investors. That is, they do the work for analyzing and interpreting the risk for the investors. That they helps in interpreting as well as analyzing the risk and for calculating the rewards, etc. Third one, they help lower the cost of financing due to the economies of scale. That is, they help to lower the cost of financing by taking into account the economies of scales. Then they helps to spread the risk between investors by providing a safer and more secure form of investors. That is, they helps to spread the risk between the investors. That is, they helps to minimize the risk by spreading the risk across the investors. These are the advantages of financial intermediaries. First one, they provide a convenient means to investors and borrowers who are not that much expertise in the financial transaction. Second one, they helps it to analyze and interpret the risk as well as the reward for the investors. Then third one, they helps to lower the cost of financing by taking into account economies of scales. Then fourth one, they helps to spread the risk. These are the advantages of financial intermediaries. So that we here these financial intermediaries are the linking person or the middleman or institution who connect the lenders as well as the borrowers.